I've been working as an extractive metallurgist in projects for most of my career, and today's presentation is about finding the silver lining for capital by understanding and identifying trends in capital markets. If you've worked for an equipment supplier in capital, you will know it's either feast or famine. There is nothing in between. So the factories are either bursting out of their clothes or there's very few capital orders. Unfortunately, we only see orders in project execution. So unlike design houses, we cannot charge for studies or any man hours while we're going through all the different phases of projects. Multotec is lucky because we've got consumables, and I would say that is our factory weight control, and that keeps our factories going on downwards commodity cycles. For me to understand and identify commodity cycles, I've looked at 3 pillars. And the 3 pillars are linked to commodity cycles and the forecasting of commodities. Also, investor sentiment. Investor sentiment is country specific. And the one thing that links the two to each other is the country mineralogy. And I will explain the 3 pillars that makes up capital sustainability or the go of a project in more details. When we look at commodity forecasting, the important thing is that your shareholders want to make money. And therefore, we're looking at a positive commodity forecast, and we use information from Index Mundi and AfriForesight. The Investor Attractiveness Index shows you where the project will be executed. For that, we use Fraser Institute information. And the thing that links the two to each other, the commodity forecast and the investor sentiment, I've used the World Mining Location Figures. The reason why I use Fraser Institute is because it's top ranked in Canada and the information was freely available on the web in Excel, so I could use that easily. On a downwards commodity cycle, I've tried to link the commodity prices to what we saw in Multotec with regard to capital orders. This is just one of the examples. I've taken the iron ore price from Index Mundi, and that is the blue line. It's all the blue axis and the blue line. And I've linked that to Multotec outstanding orders. That is the green axis and the green line. And you will see there's a definite correlation. You might ask the question, why do we still see orders when there's definitely a downwards trend? The reason is that for iron ore, we don't always look only at the commodity price, but we also look at the margins. And you will see that each of these points on the graph is a specific iron ore order that we've tracked. The next slide is quite busy, but this will tell a story about what we saw after a downwards commodity cycle. The information used is firstly the commodity metal price index as presented by Index Mundi. So everything on the blue axis as well as the blue line is the commodity metal price index. And this represents a whole lot of different commodities. The green line as well as the green axis presents Multotec capital outstanding orders and therefore our factory loading. During the period from 2011 to 2015, we were on a downwards commodity cycle, and you will also see this trend in our Multotec outstanding orders. Then in January 2016, things changed, and the market followed a positive commodity cycle. 7 months later, we saw our capital order income. And therefore, I've built a lag of 7 months into the axis of the Multotec capital outstanding orders. So this lag presents the time when the project is voted, the design house sends out their inquiries until we get the first order. We saw a cumulative growth in our factory loading. And the blue line, you can see the growth in the commodity metal price index. I believe that the amount of orders that we saw in this period is also linked to the time on the downwards commodity cycle. So we usually do all the work at Multotec in the downwards commodity cycle, and then once the commodity prices started increasing again, we see the orders. This graph is over a period of 20 years, and this presents what we've seen in capital over 20 years. So again, the blue axis as well as the blue line is the commodity metal price index. The green line as well as the green axis is Multotec process equipment order intake, again of built in a lag of about 7 months. This is indicative of what I understand of the market. So on a downward cycle, we mostly get consumable orders. This is sustainable business, and I believe there's pretty much a parallel relationship because we see very few big capital orders on a downwards commodity cycle. When this cycle changes and we're in a rising or positive commodity cycle, we grow the business and we see exponential growth in our capital orders. What happens then is that we open the market for the next downward cycle to reap the results on consumables. What is different from Multotec compared to all other companies is that Multotec keeps their people. So usually on a downwards commodity cycle, people will retrench their staff, or we also see liquidations at small design houses. Multotec, however, keeps the people that's done the work in the downwards commodity cycle, and then we always reap the results once the commodity prices has changed. It's very important for me to be intentional on a downward cycle, and we need to plan and gear for growth for the next boom. We keep a close eye, and we've got people like Roy Roche in the company that's very well afraid with the capital markets. So we keep an eye on commodity trends. We also look at the forecast provided by AfriForesight. It's not just important to look at a positive commodity forecast. It's also critical to look at margins, because sometimes, even though the forecast is not positive, if the margins are positive, we're very likely to get brownfields projects. For investor sentiment, I've used the Fraser Investment Attractiveness Index. Investor sentiment is mining and country specific. So on a downward cycle, I also wanted to see what is the relationship between investor sentiment and where the orders are coming from. So if we look at commodity prices, that shows us which commodities will yield orders. But if we look at the investor attractiveness index, that is country and mining specific. The first thing to look at is mineral potential. That's related to the geology of a specific area. So 60% of a decision to move into a project is linked to geology and mineralogy. But however, the most important thing is policy perception. If the policy perception is not positive, no project will move into execution. And if we talk about policy perception, we talk about things like taxation, infrastructure, socio-economic agreements, political stability, labor issues, and geological data. Security of a country is also critical. So if this is not in place, the project will not go ahead in a specific country, or it's very unlikely. I've looked at two things. I've looked at the Fraser Investment Attractiveness Index, but I've also looked at the change in the Investment Attractiveness Index. My thinking was that the mineralogy was always in the specific country, and if the policy perception was positive, the mine would have been developed maybe many years ago. The reason why I looked at the change is the thinking is that when things changes in a country and the policy perception becomes positive, then people will start to invest, and all of a sudden we should see the orders. The question is there a link between investment attractiveness and what we see at Multotec? The first thing I looked at was the period between 2016 and 2020. So again, we're looking at a positive change in a specific country's policy perception because the mineralogy has always been there. The countries with the highest positive change in the Fraser Investment Attractiveness Index for the period 2016 to 2020 was Mozambique, Zimbabwe, Mali, Botswana, and South Africa. Now, out of 54 countries in Africa, the question is there a link between investor sentiment and what we see in Multotec? And immediately, if we looked at our top capital orders per country, there was definitely a correlation. The most interesting thing was that for the only country in West Africa where we saw a positive change in the investor sentiment, we also received the biggest capital order for that year, 2020. I then had to look at repeatability because this could just be a once-off. I looked at the information from 2015 to 2019 to see if we could see the same trend. Now, between 2015 and 2019, the countries with the highest change in investor sentiment was Guinea, South Africa, and Zimbabwe. And again, the question is, did we receive capital orders from these countries? Immediately, you can see that from 54 countries, these were in our top countries for capital order intake. And most interestingly, was that our biggest order for 2019 came out of Guinea, which also had the highest change in investor sentiment for the whole of Africa. I did the same for 2014 to 2018. The countries with the highest change in investor sentiment, Zimbabwe and South Africa. And again, we could see that we yielded capital orders from those countries, from the 54 countries in Africa. We also saw large capital orders coming out of South Africa specifically for that period. Between 2013 and 2017, the biggest change in the investor sentiment was in Zimbabwe first, Mali, DRC, Ghana, and South Africa. However, when I looked at the figures, I did not see the orders for Mali. And the question was, is this model working? Is this trend sustainable? Then I went back to the model. First of all, my question is, was there a positive change in investor attractiveness index for Mali? And the answer is yes. It was the second highest of all countries in Africa. Secondly, I looked at world mining data. What is mined in Mali? And it's obviously the biggest mining is precious metals, and that's gold and silver. And then in order to get the goal for the capital sustainability, we needed a positive commodity forecast for return on investment. Over that period, unfortunately, gold and silver prices dropped between 2013 and 2017. So all of a sudden, it made sense why we didn't get the capital orders in Mali. And that confirmed my 3 pillars of capital sustainability. So basically, we did not get the orders in Mali, but that's because of commodity prices and not investor sentiment. So the world mining location information was used as the link between the commodity price and the country. You can use mineralogy. I just used this information because it was freely available. So that is the final link between the 3 pillars. So here we've got commodity forecast, we've got investor attractiveness index, which is country specific, and then the link between the country and the commodity is my world mining data. The world mining data also gives us interesting information about maybe the top countries in the world producing, for instance, gold. It also shows us that Multotec has been doing the right things. We recently started manufacturing in Brazil. We've also started manufacturing in Chile, in South America. And if you look at the top gold countries in the world, you can see that Brazil is also one of them. This is just for PGMs. and we're definitely reaping the results of PGMs on our doorstep. This is information for copper, again interesting in South America, and for nickel. And that brings my 3 pillars for capital sustainability together. However, capital remains unpredictable. Sometimes you have to use your crystal ball, but you also need a bit of a better understanding of the markets, but also of the models. So one of the things we've been looking at is understanding capital models and trends in the market. We see very few greenfields projects. Greenfields projects are projects where there's new operations and new mines. It's usually expensive projects, and I don't foresee a lot of greenfields projects in the future for South Africa. We, however, saw a significant boom in brownfields projects. We supply the capital equipment into these brownfields projects to design houses in South Africa. So a brownfields project is where you repair, upgrade, replace, rebuild, or you do addition to existing plants. We know that brownfields projects are difficult and that we have to mitigate the risk. A lot of this mitigation is also done by the design houses that we work with. Interestingly, Africa Mining IQ also did this curve where there's a downwards trend in new projects, that would be your greenfields projects, between 2016 and 2020. In addition, you can see an increase in your expansion or brownfields project. This was just prior to COVID. Project models is also important because since 2008, there's definitely been a new shift and trend in the market. So Multotec has got excellent technology and quality, and we're very much geared for the EPCM market. We, however, saw more and more LSTK EPC projects. We also realized that clients are more price sensitive, and we even lost projects to Chinese manufacturers. The project timeline is important because on a downwards commodity cycle, we want to be able to do the work to reap the results when the commodity market changes. This information from Africa Mining IQ indicates an average of about 7 years between project conception to execution. So from your first maybe budget, or it will take 7 years to production, and therefore it's critical that we do the work on a downwards commodity cycle. In summary, it's important to know which commodities will grow in price and to know what the forecast is. It's also important to know where we've seen a positive change in investor sentiment, and that is country specific. For me, I used mineralogy or geology to link the two together. So you can use any other information as well if you can get the link between the commodity and the country. And there's various models available that can do that for you already. Capital and models and trends influences our pricing and the way we think about projects. And then we have to be intentional on a downwards commodity cycle, and we need to prepare for the next boom. I will continue to learn and expand my knowledge of capital trends in commodity markets. And even if we understand the trends, we need to go the extra mile for our customers. And we will continue to share our knowledge and our ventures with you.